Hello, everybody, and welcome to the 57th edition of LM's Weekly Wrap, our weekly program to cover the developments in the markets, the domestic markets, as well as international markets. As we come now towards the fag end of the earnings season in the domestic markets, I think it's been a very, very busy earnings season. And if one were to take the crux of the earnings season, then a lot of observations relating to how the economy is on the mend. It's improving. The input pricing pressure is coming down. The cost pressure is moderating. There has been optimization in the inventory cycle, working capital cycle overall, and lots of many other interesting observations. Apart from that, we have in the international markets some dramatic events which have happened during the week, and prominently which includes the Fitch downgrade of the US economy. But overall, I think the markets continue to show a lot of resilience. There is a lot of activity as far as the mid cap, small cap universe is concerned. And to throw more light, of course, on the global as well as the domestic markets, I have with me Jash. Jash, welcome to the
Thank you,
show.
sir.
And that will be followed by the sectoral outlook from my side. So, Jash, please take us ahead. Yeah.
Thank you, sir. So basically, I'll be starting with Nifty as usual, and so the Nifty was seen under pressure in the last 3 days, 3 trading sessions because of the downgrade of Fitch, the global scenario. So we saw that Fitch downgraded US from AAA to AA plus, but we have been seeing a lot of protest from the US Treasury side. That is, Janet Yellen has been saying that this is based on old data, and right now the statistics of the economy are greatly different, vastly different. So there's a lot of protest over there, but still we're not seeing this for the first time where Fitch has downgraded the US markets from AAA to AA plus. That happened in 2011 as well, and 2011 we had seen a steep correction of 10%. But the thing that repeats itself, the markets are well prepared for it if it happens again, and we don't see such kind of adverse reactions. Yeah, of course, it has shaken up the quietness that was there in the global markets. We had seen a lot of profit booking and a lot of money being pulled out from there, and that is why we saw the markets crashing down. I wouldn't say crashing down, but booking profits and exiting some kind of cash flows from there. But that still is. If we go to see the Fed, the data has been coming good. So we should wait over there. And as far as the global geopolitical issues are there, Russia and Ukraine, we need to see how that is going to pan out. There is still some kind of irregularities over there, and that's why we are seeing the crude shooting up to $85 a barrel. And that is the main part where India and the other economies need to watch out, because we are prime importers of crude, and if that starts going on more north of $85-90, it's going to definitely put pressure on the Indian markets, as our forex reserves will start depleting then. There was another major move by the government of India to handle the forex imports. That was the banning of importing laptops and computers and mobile phones. More light will be thrown on Nirav sir on that aspect. And coming back to India, India is showing a lot of resilience, as Nirav sir said. Though we saw some profit booking, the market had run up drastically. But today we are seeing some kind of positive green shoots. The market has become steady and it has started moving up. A lot of reasons are there. Maybe India is not placed as bad as the others. And one very important macro level point I would like to point out is India is exactly where China was in 2006. We are slightly north of $2,000 per capita income. And if you go see the history, all the developed nations, you see how they have moved from $2,000 capita income and went up north from there. They have had seen 5 times growth in a decade. So even China, you saw that growth in China from 2006 to 2016. and the foreign institutional investors have been constantly seeing that in different countries. They've seen it in Japan, South Korea, USA, Germany, all of those countries. So they are also expected for a very strong structural growth in the country over the next 5 to 10 years. I think we should remain invested, and the main part over here from $2,000 and above is it focuses on premiumization. So you're all, if you go to see as simple as a car, people have shifted from manual to automatic, from normal audio system to infotainment systems. So that is the kind of premiumization we are going to see across the country. And also the demographics are very supportive. This ends my commentary on the domestic and international markets. I would like to hand over to Nirav, sir. Thank you.
So thank you, Jash. So as pointed out by Jash, I just like to say that once we cross the threshold of $200 per capita income, what happens is that there is a kind of operating leverage which comes into effect. Once the operating leverage comes into effect, what we see is that there is an exponential jump in the bottom line. So in this particular case, in this particular context, what is implied is that once you cross $200, $2,000 per capita, the next phase of growth is very fast. So you'll see a possibility of exponential growth in the next 1 decade. So this is something which we are already experiencing in our economy. Starting off with the auto sector, I think the auto sector continues to perform exceptionally well. We've seen CVs, passenger vehicles, etc. continue to do well. We've seen good numbers from Ashok Leyland. We've seen good commentary over there. Today we had the results of Mahindra & Mahindra. It's been very strong set of numbers, and there also the operating leverage has come into play. They have identified certain areas where there's going to be capital allocation which are going to be priority for them, which includes the like of logistics or hospitality sector, real estate, etc. So I think M&M Group very well focused. The stock has been quite resilient. Last week was difficult because markets were skeptical about the Mahindra Group's investments in RBL Bank. So I think some big losers for last week were Mahindra, Tech Mahindra, etc. So, but apart from that, the results have been very good. Tata Motors has posted a very strong set of numbers. Markets were slightly disappointed with Maruti's numbers. Yesterday we had the results of Eicher Motors, and Eicher Motors again very strong set of numbers. 50% jump in the net profit. They've reported a net profit of 918 crores, and the management is indicating in a way that the two products, which is Hunter 350 and Super Meteor 650, have been very well received in the domestic markets, as well as received a very strong response in the export market also. So I think Eicher has done very well for itself. Escorts Kubota, again, they are doing very well as far as the construction equipment space is concerned. So I think what is happening is that auto continues to be in a very sweet spot. I think barring the two-wheeler makers like Hero MotoCorp and Bajaj Auto, they continue to be under slight amount of pressure. Another sector this week which was there in the limelight is the cement sector. So I think cement, we are continue to see consolidation. We had news that Sanghi Industries is on the radar of a lot of companies for acquisition purposes, and finally the Adani Group has lapped up Sanghi Industries Limited. Sanghi Industries has a cement capacity of 6.1 million tons per annum with a clinker capacity of 6.6 million tons per annum. They have 2,700 hectares of land in Kutch in Gujarat. And apart from this, they have got limestone reserves. They've got the captive jetty. So I think what is happening over here is that Ambuja has got very strong plans for Sanghi Industries. They want to scale up the capacity in the next 2 years. They want Sanghi Industries to become the lowest cost producer of clinker in the country. They want to expand the jetty operations, the port operations, so that they can accommodate larger vessels. Now this, I think, is a very strategic move from Ambuja Cements, because Ambuja Cements, of course, which is now a part of the Adani Group. Adani Group has a very strong presence in Kutch. We all know Mundra Port, which is located in Kutch. and now the kind of synergies which can be worked out along with the acquisition of Sanghi Industries is something which we will get to see in the time to come. Already we are seeing in the cement space, Ambuja Cement has reported a drastic improvement in their operating profit per ton. The improvement is to the tune of 350 rupees. So I think we this time around we've seen an operating profit of close to 1250 rupees per ton as far as Ambuja Cement is concerned. So we are seeing that there is a lot of synergies which are there in place, and these synergies, what has been indicated by Ambuja Cement, have the capacity to redefine the cement landscape. So they're going to implement some changes which are going to bring drastic changes in the overall cement landscape. So I think a lot of small companies will be on the radar of investors. Companies like Orient Cement, KCP, Kesoram, Sagar Cements, Star Cement, etc. These all players could be potential acquisition targets in the near future. So I think cement is in a sweet spot as of now, where we are expecting improvement in the margins also going forward. Third important sector in this particular week was the pharma sector. We had very strong results coming in from Cipla, Dr. Reddy's, Sun Pharma, etc. So I think we've seen good moves in the pharma sector as well. A sector which was badly impacted by the results, there was the IT sector is under pressure on account of the global uncertainty, etc. But I think we saw some healthy pullback in the IT space. This week's biggest gainers in the IT space were HCL Technologies and Tech Mahindra, which made a comeback. And we also saw a strong momentum in Infeed, TCS, etc. Power sector stocks continue to do very well. We've seen good momentum in this week in NTPC and Coal India. So I think a lot of momentum, healthy momentum is being seen across a lot of sectors. Banking today, SBI has disappointed. Tomorrow we have the numbers of Bank of Baroda. Overall, I think banking has been in a neutral space as of now. Until we see any major moves over there. Capital goods continues to do well, but overall this week I think Cummins has disappointed. Otherwise Thermex has posted a good set of numbers. Siemens continues to be in a good space, and we've seen commentary that capital goods makers are likely to do well on account of the thrust on infrastructure. Rest, I think railways theme continues to do well. Railway stock continue to perform well. Defense overall is doing well. We've seen the result season progress fairly well. And I think finally we come to the FMCG sector. In the FMCG space, we have companies which are still in a wait and watch mode. Overall, as far as discretionary consumption is concerned, most of the companies, they have indicated that they will look forward to the festival season demand. Because last year we have seen a fall in the demand, and most of the companies are waiting for the festival demand to start. As a part of the festival demand, the wholesale buying, the trade channel starts buying from the next month. So they will start loading up for the festival season from next season. So I think we can expect some activity over there. And overall, I think the erratic pattern of rainfall, the way the rainfall has progressed, the unseasonal rains, the floods in certain parts of the country, they have put pressure on the food grain patterns, growth patterns. So I think inflation will be one very important factor to watch out for. Plus, with the OPEC countries having extended the cut in the output, crude output, till September, that is likely to put pressure on the crude oil prices. So these two factors are some important factors to watch out for, because if inflation raises its ugly head again, coupled with higher crude oil prices, then that could be have a negative impact on the overall economy. A lot of things to discuss, but I think time constraints will permit us no further. We hope you've enjoyed our program. Do write back to us with your feedback. And for the closing comments, I'll hand over to Jash. Jash.
Thank you, sir. It was great being here. Please, to hear from us more, please like, share, and subscribe. Thank you.
Thank you.